We have something very interesting to talk to you about today, how to value Bitcoin companies. I have a really great panel for you. We have Muzz here, who does a lot of early stage ventures. He's going to be keynoting something here later on this stage about it. Greg, he does, I will say, seed, pre-seed, and early, let's say a little bit more secondary market. And then down at the end, we have Brian, who does purely only secondary market for existing companies. So between the three of us, we will get a great array of answers. So just to get started, if you want to introduce yourself, who you are, and
Sure. I'm Brian Estes. I'm the CEO and CIO of Off the Chain Capital. We're a value fund in the blockchain space. We're registered with the SEC, so I have to give my disclosure that anything I say doesn't constitute investment advice. Keep the compliance department happy.
Greg Carson, managing partner of Humla Ventures. We are a venture capital firm focused on direct venture investing, late stages, secondaries. We also have a XPTO Humla fund for early stage investing, which is where we do pre-seed and seed and a little bit of A. We've been investing for the last 6 years, and we have maybe 49, 50 investments in the space.
Hi, Mike Jarmuz. My friends call me Muzz. They shout it out sometimes. Our company's Lightning Ventures. We invest solely in Bitcoin companies. That's Lightning, Liquid, just all things Bitcoin that don't interact with anything else. We're solely focused on that. Kind of stage agnostic, but everything is pretty early stage in Bitcoin. Previous to that, I was a psychotic angel investor. Still am, with a massive amount of companies. I actually got started on the secondary markets, and it's definitely a great place to get started.
Cool, and I'm Eryka Gemma. I also run a fund called Timelock Ventures, which is a advisory and venture fund that invests into blockchain startups. A little bit less Bitcoin, maybe more blockchain. I don't know why they let me on the stage, but definitely want to make sure I get good answers out of this, guys. So just to start off simple, we'll be a little bit general. I really want to leave you guys with actionable items that you can work with. So the first question is there any particular geographic jurisdictions that you guys prefer to invest in? Is there any places that you'd like to stay away from?
So I'll start. So I've been in the business since 2014. Geographical, we focus on the US, mainly because my network is in the US. So I try to only invest in companies where I know the management team, where I have a personal relationship with them, and it helps filter out a lot of that risk that comes when you don't know the management team and you can't trust them. So.
Yeah, we're definitely more global. I mean, since we're sector focused, we call our business financial markets ecosystem. So we like companies that are the rails, or like the picks and shovels around the space. And so what we do is we kind of, we're non-geographic, but we like to follow the relationships. Kind of like a honeycomb, like the CEO is doing, they're doing business with this other company and they're integrating. Like we were first investor in Deribit, which is the largest options marketplace. And then we found Anon at Paradigm Trading, and he wanted to do block trading for options and that kind of, or he wanted to do spot. We invested in pre-seed, and then we put them together with Deribit to connect the two systems, and then they both grow together. And then we do the same thing now with Credora, which is doing credit oracles and stuff like that.
So, Bitcoin's global. We're not particularly focused or limited to any geography. And a lot of these ideas that are regional are kind of, you can replicate them. There's a Swan Bitcoin in Australia, right? Like a regular DCA type of app that's kind of bridging other TradFi and Bitcoin sort of products. It's that in France or in Canada. There's a lot of these type of things. So Bitcoin's, borderless and languageless and global, and we're focused everywhere. I know that there are some Bitcoin native VCs who are really focused on, like, say, Africa, but we invest everywhere.
Since we're on the topic of jurisdiction and location, do you guys have any, let's say, advice you would give to the audience about the regulations that are the regulatory clarity that is lacking in the United States, and maybe places that people could look if they wanted to start a company in Bitcoin, that they might not run into so many issues? And you don't all have to answer, but only if you have an answer.
Definitely the jurisdictional enforcement actions this last year makes it tough to, especially if someone's going to be, well, I guess if it's a Bitcoin only, I mean, Bitcoin is actually, there's some clarity there, so it's maybe better if you're a pure Bitcoin.
Yeah.
If you're doing one of these kind of shitcoin, altcoin, whatever, I think it's massive amount of risk. and then, or also if you're trading anything except for Bitcoin, it could be a risk. Jurisdictional risks are a big part of the business. A lot of it is, we like clarity. We like to invest in companies that have figured out their jurisdictional strategy. Some of them are, I guess at-large companies. Their jurisdiction is like Mauritius or Malta or something like that. And so one of my favorite things about Bitcoin is that it is a different approach to the old Silicon Valley model, where you need to be somewhere bicycle to each of their portfolio companies and see them all the time. And this, we have portfolio companies where I meet them for the first time after we invested here, but our diligence is very strong, and we check a lot of people. We Zoom with them a million times, and we have common people. But then you meet them at the Bitcoin conference or something.
Yeah, international tech talent is something we can definitely tap into in our industry.
Yeah.
Any other suggestions, Andres?
Yeah, I would just like to add on. The lack of clarity from the SEC is destroying the industry.
Yeah.
It's driving all the U.S. innovation outside the U.S. When we started the internet, back in 1992, 91, the U.S. benefited tremendously from the jobs and the tax revenue that Google and Amazon and all these, Yahoo, eBay, that they were based here in the U.S. and we benefited, and the SEC is doing a disservice by chasing these companies outside the U.S. because the blockchain and Bitcoin is the future, future part of the internet, and it should be here in the U.S.
Yeah.
It also depends on what the company is. Does it touch fiat? Is it, does it require an MTL or other licenses? I mean, the trend with Dubai is really changing all their laws and making it friendly. And we have a couple of companies who are choosing to incorporate over there. Or something like IBEX, which IBEX's incorporation structure is like, it's like a game of Connect 4. I mean, there's so many different sub-entities and the Cayman stuff. So I think it really depends on the business, though, because if it's just a simple app, it probably doesn't require it, and a Delaware C is fine. But it would be great to see the U.S. be more supportive.
It would be great. Hopefully we can get Tulsi Gabbard to let that happen.
Yeah.
So like Greg was saying a little bit, it's not really what you know, it's who you know, right? And so when you're looking at founders and you're looking at the people involved in some of these companies you're investing into, are there any key traits that you try to keep an eye out for?
Go ahead.
Okay.
Right.
So the number one factor is trust. If you can't trust the management team, you just walk away. And there's been a number of deals I've looked at. I've told this story a few times. I was actually on stage with Alex Mashinsky last year, and we kind of got into it. But the first time I met him, we were in New York. He was pitching me on Celsius to be an investor in the equity part of Celsius, and he lied right to my face. In the presentation, he was showing that Polychain was the lead investor in the company, and I'm a general partner at Polychain. I knew that wasn't true. And from that day forward, I just never trusted the guy. So it's all about trust. If you can't trust the management team, and you have to get to know these people first before you invest. And that's why a lot of people got in trouble with FTX. They were investing without knowing Sam Bankman-Fried. Right. And that gets you in trouble left and right. So.
Yeah, this is a great tip for anybody that's raising out there or as a startup, is get to know your investors maybe a little bit more as a friend level before you ask them for a check size, because you're tied to those people for a while. Do you have any answer, Greg?
Yeah, I mean, management team is the CEO specifically, and the management team is the most important aspect to any investment up and down. Later stage, we have more like criteria. We have like a scorecard for the company, but really, I like the trust comment is super important. Beyond that, we do have some, track record, either serial entrepreneurs are great, or people that come out of some sort of like larger brand for the first time, jumping into their own thing. Those are the kind of two ways that it works best. But really, a team that's kind of full, where they have not just the CEO, but they've kind of thought about it in marketing. I mean, and I think in our space, the CTO is super important, or the lead tech.
Yeah.
You can't. The technology is so important, and the team around the technology is so important, especially in the early stage. Everything's going to depend on that team staying together. So if the team itself doesn't have a relationship with each other, like they just showed up the day before the pitch, there's a big risk there, especially if they need, if they're all mission critical.
Yeah, so track record, and he'll take people who have ex-TradFi backgrounds. So if you guys want to come into the crypto space, you are welcome. Anything you look for, Muzz, in the founding team?
I mean, the relationship that founders have with each other, maybe they were siblings. Siblings are a great founder makeup to invest in, right? Because you think about conflict resolution, they've been handling conflict resolution since they were like 5 years old, fighting over the toy. So I particularly like siblings who are founders, who are building together. But at those early stages, there's not much else you can really look at. It comes down to the person. And ultimately, you have to like this person. And that's what it comes down to. Like it's not just about the money, and for the founder, that should be true as well. You should genuinely like the person you are taking money from, because you are going to be with them for a very long time. So that's definitely something to consider.
Cool. Greg, I'm going to start with this question for you. But are there any subsectors of the industry that you like to look at? For example, people tackling healthcare, people tackling green energy. Anything in particular that you like to look at?
Yeah, I'm pretty biased on that. We really focus on the financial ecosystem. So we're all ex Wall Street, ex traders, ex algo guys, ex hedge fund, and we see that the first big transformation, especially for this space, is to replace the stuff that Wall Street does. And for us, that's a massive amount of things to replace, whether it be options or derivatives or prime brokerage or accounting. You have like Luca or Bitwave or those kind. We were investing in those guys as well. We also invest in something that I think is different from everybody else, which is we look at things in traditional finance that we can invest in that is going to incorporate to Bitcoin within like the next 3 to 5 years. So we did like an investment in an AI tool for mapping structured credit into digitization, and then the next stage will be like to map that onto Bitcoin or blockchain. And we invested in like Formidium, which most hedge funds are using as their fund administration. So we don't just stay there. And like when it comes to healthcare or those types of things, we're just not.
You don't touch it.
It's not impossible. We've done one or two things, but it's more like
financial infrastructure. Makes a lot of sense. And Brian, I guess, are there any, as someone who buys stock of existing companies that have been around in the space for a while, are there any particular company's stock that you're looking to buy right now?
Yeah, so we were talking about this backstage. Kraken, I think, is a great, and like I said, not investment advice. But if you're an accredited investor, you can go to the secondary markets like Setter Capital, Forge Global, and there is Kraken for sale. You could buy Kraken as an individual investor on those sites. It's trading for about a $3 billion valuation. They did their 2019 round at a $4 billion valuation, so it's still selling for a discount to that. I think Kraken's good. On these sites, you can find BitPay out there. There's a number of high-quality blockchain companies out there. But we're like Bitcoin maxis. Our goal is to outperform Bitcoin. I think one of the best opportunities out there too is, if you want Bitcoin at a discount, look at the Grayscale Bitcoin Trust or the Osprey Bitcoin Trust. Both of those sell for between a 30 and a 40% discount to what the Bitcoin's worth inside those trusts. And I think eventually they'll get converted to an ETF, which means that the discount will go away as the price of the stock goes up to the NAV value, and you recover all that.
The thing to remember about the secondaries, though, and I love the secondary markets, my first investments were all on secondary markets. Because, if something's already worth a couple $100 million, the likelihood of it going to zero is much less than the early stage, so it's a lot safer. Their minimums are higher, but the thing to remember is it's very thinly traded. So, somebody can put up their shares on the secondaries. It's subject to a ROFR, right? A right of first refusal by the company, where they would buy the stock themselves, and it's still a win for the company, and the investors just get their money back. But, when you have that thinly traded market on the upside and the downside, you can either get really good deals, like now, like the secondaries are all trading at massive discounts, like what he's saying about Kraken. Like now is a great time to buy Kraken for, whatever it's trading for now. But it was trading for 5-6 times that. Maybe a year ago today, or less than a year ago today. So that's something to think about too, is that when there really is an opportunity there, or even if you wanted to unload some shares on the secondary markets, in a frothy time, that's a great time to put out a big ask up there and kind of see what happens.
Mm-hmm. So we have about 9 minutes left, so I want to get a little bit more into specifics. So Greg, this question is for you. I'll start with you again. How should founders think about building investment syndicates in a downturn? And Muzz runs a really big syndicate as well, so Muzz, if you have any insight on this.
Founders raising money, I think it's a very different market today than it was this time last year. Actually, it's really exciting for Bitcoin. There's a lot of new Bitcoin companies that I think are commanding a demand for the syndicates. Syndicate development is very important, and to realize that the investors are running businesses, or they're very sensitive, and the whole basis of investment is like a financial question. If they're not putting money into you, they're going to be putting money into something else. So if you think your company's worth this value, you may be right, you may be wrong, but there's 3 other companies, or there's hundreds of other companies we're looking at the same time. If the market's down, the initial valuation is very critical, and you have to think of your investors as your, like Muzz said, we want to like you, you want to like us. It's, you have to treat us like we're joining the team. So if you just started your company and you did a prototype, you have no revenues, and you're like, oh, it's going to be this great Bitcoin company, it's worth $45 million day one. That means you're trying to take off the table essentially like a massive amount of value. We're going to give you $1 million. We're going to give you $2 million. You're taking like $40 million of that day, and it's still a ton of risk. Whereas there's another company just like you that has revenues, that has a prototype. They're very humble, and they're doing a $9 million valuation. When we compare those, it's very easy for us to decide to go to them and not to you. So building a syndicate, you really have to be sensitive of how to build value with your investors, and then also to get your investors. The other thing is to get in a lot of investors, talk to a lot of investors soon, and get more of them interested at the same time, and let us talk to each other.
Well, what do they say? It's, your results may vary, your mileage may vary. I mean, people run syndicates for different reasons. There's, every syndicate is private by default, right? It has to be. But there are, really private syndicates that are just for LPs who may be invested in a fund. So whether those LPs really add value, so if you're leading around and you decide to do a small sidecar or syndicate for your LPs that are already invested in that fund, that's a private deal that's only accessible to them and probably has a much higher minimum. And that's a way that you can participate, or like what we're doing, which we have a very active, vocal, large group. And I try to leverage that talent with our founders and teams to figure out what everyone's superpower is. So if somebody needs something, you can kind of go to that talent pool to see if that person wants to meet with the founder or do something to be impactful. People say a lot of bad stuff about syndicates. Your deck's out there, and or it's not as private, but it's a zero tolerance policy. In regards to sensitive information. So I don't particularly think there's anything to worry about, but a lot of times those syndicates really get less and less as the company gets larger, and the amount of details and kind of information that is shared does shrink because it becomes more of a concern at the later stages. But if you're looking to get started with small checks, I mean, you should definitely, absolutely join some syndicates and invest small amounts, especially if you're getting started, and start somewhere with that.
Yeah, so taking some recent events into account, how do we, I want to give the audience some advice on how to circumvent investing into companies like FTX, right? FTX was a huge problem for a lot of people, but I would say that the big problem about that was what we saw, that everybody else was relying on the cheap due diligence of other people. We saw big name people get involved in FTX. We saw Mr. Wonderful, who's this Shark Tank figurehead, also invest into FTX, but nobody actually really looked into their books to see what was happening. Do you guys have any actionable advice that we can give to investors, maybe people that want to put their money in a certain place to look for when looking at blockchain companies? Because we can't, it seems like we can't rely on the due diligence of some of these large VC firms like A16Z that invest into FTX as well.
Well, I mean, diligence is super important. I think you have to, like Maz said, it's a zero tolerance policy. If you ask questions and they won't answer them or they don't answer them, you just have to, get away from the FOMO. And, like in a number of these companies, I'll be asking questions. We'll ask for like a, like reference, introduce you to someone you've worked with before. And especially, like in Bitcoin, we see it less. People are pretty, it's a tight-knit network.
It's a small industry.
In non-Bitcoin, sometimes especially when we've touched on things that are like close to blockchain or whatever, they're like, oh, we're not going to share that kind of stuff. We don't call them back after that.
Cool. Ask questions. Questions always have an answer. If they don't want to answer, then that says something. Any other tips you guys have?
I mean, most people don't have access to the founders, right? I mean,
yeah, exactly.
It's hard to get that access. And I mean, we're at a Bitcoin conference. I mean, not to overthink it, but the easiest thing to do is just buy Bitcoin. I mean, I look back to 2014 when I first got started in this, and I was an early investor in Coinbase back then, and seeded Polychain, and bought Bitcoin, and invested in Digital Currency Group back in 2015. And I was like, I have a nice diverse portfolio, but looking back over the last 9 years, I think I would have been better off just buying Bitcoin and just holding it for the last 9 years. So.
You hear that, guys?
Well, first off, Coinbase from that round did like a 4,000xer, and Bitcoin definitely didn't. So, I mean, Kraken, even over like 2014 to 2019, did like 110x. Bitcoin did like maybe, 30 to 40x. We have those numbers. So it definitely should outpace Bitcoin's performance. If not, I wouldn't be doing this. I would be doing something else with my life. And it's hard to compete with the best performing asset of all time while you're still investing in that indirectly. One way to avoid FTX type of problems would be don't invest in crap. Don't invest in anything other than Bitcoin. Stay away from it. The minute that you hear there's a token, we're looking at blockchain. All right, we're looking at protocols. I mean, that's crazy. So if you just anytime, it's great for a Bitcoin-focused VC because you just get hit with these emails, and the minute you see it, it's like Web3, Polychain, this chain, that chain. It's like delete, delete, delete. It's a dating app for the metaverse. Delete, delete, delete. I mean, it's like this guy's like, I have an energy drink. It's going to be on the blockchain. I'm like, what are you doing? So if you kind of stay away from that stuff, you don't get wrapped up in it. As far as the signaling goes, signaling is very powerful, right? And always, you see A16Z or Mark Cuban or Will Smith or whoever in investing in a deal, and you assume that someone did some kind of due diligence, right? Surely they wouldn't just pike their money in blindly with nobody, kind of checking. But most of the time, they do great due diligence, and these things just blow up. I mean, it was just over leveraged, and just stay away from that stuff. That's what we try to do. And then you can sleep well at night, not thinking about these type of things.
Cool. So last question for each of you guys. Are you guys actively investing right now? Are you guys actively taking in checks for your own funds? And then actionable places you can send people if they want to improve their pitch decks, or they want to do investor role play to learn how to pitch to companies, or code auditing.
Yeah, so we're open right now. So we're an evergreen fund, been around since 2016. Sometimes we're open, sometimes we're closed, depending on if we find value opportunities. But right now, with finding all these values out there, we are open to new investors. You can go to offthechain.capital and find out more about our fund, but not to plug it. But between 2016 and 2021, it was the #1 performing hedge fund, which means it was the #1 performing blockchain fund out of all funds during that 5-year period.
Very cool.
Yeah, we still have a lot of dry capital for the early stage fund. We're not taking investors in that one. We're actively doing secondary direct investments in venture opportunities. So we're looking at all the companies from B until Series A, B, C, D, and we're investing in the equity but we're buying secondary, like we're buying founder shares or earlier angels, and we are taking LPs into that fund. We also run a business with our investors where we're bringing them like SPV opportunities. Like we'll find a special block of a really top asset and that we get access to because of the network, and that's also there. And we're also like Humla VC. It's going really well. I mean, I think it's actually the best time ever to be investing is right now. So if you're going to ever go into venture capital, it's a really good time. I think the secondary direct stuff is absolutely the best because there's massive discounts on companies that have already proved their track record. We're very careful. We only invest in companies that have like a bunch of cash on the balance sheet already or a growing revenue rate and great founders.
Well, I mean, we do things a little bit differently, clearly. But we have an active deal-by-deal group, okay, where people can invest for a minimum of $1,000 into these Bitcoin-only companies. We write our deal memos. We have a small team to do our own due diligence, and it doesn't behoove us to roll out garbage. Okay, it doesn't do us any good to roll out bad deals or things that aren't going to work because it's ultimately. It doesn't help, right? So we try to be selective. There's a lot of great stuff to invest in now. I definitely agree that now is the best time, right? Certainly the froth and everything is behind us, hopefully. We had a small pilot fund that launched like maybe a year and a half or so ago. That's like 90-some% deployed. There's a few bullets left in the gun there, but that's pretty much winding down. And there's a second fund that we haven't really talked about, but we're not really fund people. Okay, it's a different model. I personally want to have the biggest angel investing group that is active, that is supporting Bitcoin-only companies. And you don't have to be a Bitcoin-only person. There's a lot of other people in there. There's dentists in there. I mean, there's lawyers in there. There's a lot of other people in there that are closet Bitcoiners or they like Bitcoin. But I really want that to work. I like it. A lot of other VCs, it's kind of a pain, to be honest with you, to run a syndicate and to run it well in the way that we're trying to. Our Node 2 fund is technically live as of today. I mean, someone can click the button, but this is very small, like it's a boutique thing. It's not really something that we talk about. It's just a small little fund that we deploy out of, but we're really focused on the syndicate, providing education and evangelizing, participating in these early stage investing, because that's how you can really make incredible wealth and outsized returns that you can't make anywhere else. And these are not pump and dump meme stocks, things like that. These are real equity and equity-like instruments into early stage Bitcoin companies. So we love that.
Very cool. Well, I hope you guys have more information on how to get equity in great companies that are building things in the Bitcoin space. And if you don't already own Bitcoin, that is in itself a great asset class to be holding. Give it up for my panel, and I hope you guys enjoy the rest of the day.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.